like a buttercup. You're a Barbie doll. Show them all what I'm made of. Strut down the hall. Won't stop till I get enough.
Hey there. You mentioned wanting to explore some investment options as we close out 2024.
Yeah.
So we've got like a fascinating deep dive lined up for you today. We'll be unpacking a Forbes article. It's called 5 Best Stocks to Buy in December 2024.
Okay.
And it's by Jason Kirsch. He's a certified financial planner.
Mm-hmm.
So it's not just about the stock picks, though, right? We're going to like dissect how these companies were chosen and what makes them potentially stand out, especially, with this wild market.
Right. Yeah, Kirsch lays out a really compelling selection methodology. He looking beyond just the hype, he's assessing these companies based on their current strength and future potential.
Exactly. So he starts by emphasizing financial health,
Yeah.
revenue growth,
Right.
strong cash positions, healthy profit margins, basically like the fundamentals that indicate a company is built to last.
Yeah, it's like checking the foundation of a house before you buy it, right?
Yep.
You want to make sure it can withstand a storm.
Mm-hmm.
And that's where Kirsch's focus on market position comes in. He's looking for companies that have a clear competitive advantage and are resilient to economic uncertainties.
Yeah. And of course, no deep dive would be complete without looking ahead.
Oh.
Right. Kirsch highlights future potential as a key factor, innovation, product pipelines, the ability to capitalize on emerging trends.
Mm-hmm.
Because where a company is going is just as important as where it stands today.
Absolutely. He's not just looking for companies that are doing well now. He's searching for those that are positioned to thrive in the years to come. It's a forward-looking approach that's crucial in a dynamic market like the one we're in.
Okay, so Kirsch has laid out his framework. Now let's dive into the first company on his list, Tesla. Ticker symbol TSLA. I mean, it's the undisputed leader in the electric vehicle market. But what stood out to you about Kirsch's take on them?
Well, he points out that Tesla's market cap recently surpassed $1.5 trillion, making it the world's most valuable automotive company by far. But what's really interesting is that, Kirsch sees them as more than just a car company. They're building what he calls a clean energy ecosystem.
Ah, so it's not just about the cars themselves. It's about, the bigger picture of how we produce and consume energy.
Exactly. Tesla's diving deep into energy storage with their Powerwall batteries and solar solutions with their Solar City acquisition.
Right.
They're essentially trying to become a one-stop shop for sustainable energy.
That's a bold move. And it definitely ties into the growing global focus on renewable energy.
Right. And it's important to note the potential political implications, right?
Okay.
Kirsch highlights how both the Democratic and Republican parties are pushing for increased domestic manufacturing and a transition to clean energy.
Yeah.
Regardless of who wins the upcoming election, there seems to be bipartisan support for these initiatives.
So for investors, that could translate into a more stable and predictable regulatory environment for Tesla. And that kind of certainty can be really attractive, especially in a world that feels, increasingly uncertain.
Exactly. And speaking of tech giants with a knack for shaping the future, next on Kirsch's list is Apple, ticker symbol AAPL.
Ah, Apple. The world's most valuable company overall. It's amazing how they've managed to stay at the top despite, fierce competition in the tech world. What makes them a compelling investment option in Kirsch's view?
Well, it goes beyond just the, iconic iPhones.
Right.
Kirsch emphasizes the strength and resilience of Apple's ecosystem,
Yeah.
Their hardware, software, and services all working seamlessly together. It's a model that's proven to be incredibly profitable.
Yeah. Everyone knows about their hardware, but the services segment is truly impressive. Like Apple Music, iCloud, and the App Store, generate a massive amount of recurring revenue. In fact, services now account for over 20% of Apple's total revenue.
Wow.
And those margins are fantastic.
That recurring revenue is key for long-term stability. It means Apple isn't solely reliant on hardware sales, which can be cyclical, right? And it gives them a steady stream of cash flow to invest in, future innovations.
Speaking of innovation, Kirsch also points to Apple's ambitious AI initiatives as a major growth driver.
Nah.
They're clearly not content to rest on their laurels.
Right. And on top of that, they have a cash hoard of over $50 billion. And what are they doing with all that cash? Buying back their own shares.
So they're essentially returning value to shareholders and boosting their stock price at the same time. That's a pretty smart strategy, wouldn't you say?
Absolutely. It shows a commitment to increasing shareholder value. Now, for a bit of a change of pace, Kirsch takes us to a company navigating a comeback story. Boeing, ticker symbol BA.
Okay, this one is interesting. They've definitely had their share of troubles in recent years with the 737 MAX issues, but Kirsch seemed to think they're turning a corner. Why is that?
Well, he points to a few key factors. First, the demand for commercial air travel is rebounding strongly, after a few difficult years. And Boeing is perfectly positioned to capitalize on that with their wide range of aircraft.
Right. They're kind of like the Coca-Cola of airplanes.
Yeah.
Everyone knows them, and they have a product for every need.
And let's not forget about their massive order backlog. They have over 4,500 commercial aircraft on order.
Wow.
Representing billions of dollars in future revenue. That's a pretty strong indicator of confidence from their customers.
Almost like having guaranteed income for years to come.
Exactly. And then there's their defense business, which provides a significant source of stability. They have a $28 billion portfolio of defense contracts, including some, very high-profile projects.
So even if the commercial aviation market, hits a rough patch, they have that defense revenue to fall back on. It's a nice cushion to have.
Exactly. And Kirsch highlights the steps Boeing has taken to improve its operational efficiency and safety record. These are essential steps to rebuild trust with customers and regulators.
It's a long road to recovery.
Yeah.
But they seem to be heading in the right direction.
Indeed. Now, shifting gears back to the automotive world, Kirsch presents a company that's taking a slightly different path to the electric future, Toyota. Ticker symbol TM.
Okay, Toyota. Known for their reliability and those legendary Camrys that seem to run forever. What's their play in this whole electric vehicle revolution?
Well, unlike some of their competitors who are going, all in on electric vehicles, Toyota is taking a more balanced approach.
Right.
They're leveraging their existing expertise in hybrid technology like Prius while gradually expanding their electric vehicle offerings.
So they're not abandoning what's worked for them in the past, but are still adapting to the changing landscape. It's like a both and approach rather than an either or.
Exactly. And Kirsch sees that as a smart strategy, especially given the uncertainty surrounding the pace of electric vehicle adoption. It allows Toyota to mitigate risk while still capitalizing on the growing EV market.
It makes sense.
Yeah.
Especially when you consider that Toyota is the world's largest automaker by volume.
Right.
They're not just, a niche player. They're a global powerhouse.
Right. And their size and scale give them, significant advantages in terms of manufacturing, distribution, and R&D. Plus, their stock is currently trading at a price-to-earnings ratio of around 10, which is relatively low compared to, some other peers in the automotive industry.
So for value-conscious investors, Toyota could be a, compelling option, especially when you factor in their consistent dividend payments. It's like a little bonus on top of any potential stock price appreciation.
Absolutely. And last but not least on Kirsch's list is a company that's synonymous with healthcare, Johnson & Johnson, ticker symbol J&J.
Good old J&J, Band-Aids, baby shampoo, and cutting-edge medical devices. What makes them stand out in Kirsch's analysis?
Well, Kirsch highlights their recent strategic move to spin off their consumer health division, Kenvue.
Okay.
This allows them to, streamline their focus and double down on what they do best, developing innovative medicines and medical technologies.
So they're shedding what's arguably their most well-known business to focus on the less glamorous but arguably more impactful side of healthcare.
Precisely.
Yeah.
And they have a robust pipeline of new pharmaceutical products and medical devices in development, which is, a key indicator of future growth potential.
It's like they're constantly pushing the boundaries of what's possible in healthcare.
Yeah.
From new treatments for chronic diseases to advanced surgical tools.
Exactly. And one thing that really sets Johnson & Johnson apart is their impressive track record of returning value to shareholders through dividends. They've increased their dividend payments for 61 consecutive years, making them a member of the elite Dividend Kings Club.
Wow. 61 years. That's incredible consistency.
Yeah.
Especially in a world where, things change so rapidly. But what exactly does it mean to be a dividend king?
It's a designation given to companies that have increased their dividend payouts for at least 50 consecutive years. It's a testament to their financial strength, stability, and commitment to rewarding their shareholders.
It's like a seal of approval for income-focused investors, right? Those consistent dividends can provide a reliable stream of income, which can be especially valuable during, periods of market volatility or when you're looking for a steady source of cash flow.
Exactly. And those are just 5 companies that Kirsch highlighted. It's a diverse mix representing, different sectors and growth stories. What I find particularly interesting is how Kirsch emphasizes the importance of aligning your investments with your personal goals and risk tolerance.
He's right. This isn't a one-size-fits-all situation. What might be a great investment for one person could be completely wrong for another.
Absolutely. He encourages investors to do their own research, to dig deeper into these companies and others that, pique their interest, and to consider how these investments fit into their overall financial plan.
So it's not just about blindly following someone else's, recommendations. It's about understanding the rationale behind those recommendations and then applying that knowledge to make informed decisions that are tailored to your own circumstances.
Exactly. And that's what makes this deep dive so valuable. It's not just about giving you a list of stocks to buy. It's about equipping you with the knowledge and tools to become a more informed and confident investor.
And speaking of insights, what stood out to you from this discussion? What are some things that you'd want to research further?
I was particularly intrigued by Toyota's balanced approach to electrification. I think it's a really smart strategy in a rapidly changing market. And I'd be curious to learn more about their specific plans for expanding their electric vehicle offerings in the coming years.
Yeah. And I'm really fascinated by Apple's foray into artificial intelligence.
Yeah.
They've always been at the forefront of innovation. And it seems like they're positioning themselves to be a major player in the AI space.
It's definitely a space worth watching, especially with all the advancements happening in AI.
Absolutely. So as we wrap up our deep dive into these 5 stocks, let's turn it back to you, our listener. What are your predictions for these companies in the next year? Which ones do you think will outperform the market? Which ones might face challenges?
Remember, it's all about considering those key factors we discussed: financial health, market position, and future potential. Think about the industries these companies operate in and the trends that are shaping those industries.
And most importantly, do your own research. Don't just take our word for it. Dig deeper, explore different perspectives, and come to your own conclusions.
Exactly. Investing is a journey, not a destination. It's about continuous learning, adapting to new information, and making informed decisions that align with your goals and values.
It's like we've given you a set of puzzle pieces.
Yeah.
And now it's up to you to assemble them into a picture that, makes sense for your own financial goals.
And remember, investing isn't just about picking the right stocks. It's about managing risk, diversifying your portfolio, and having a long-term perspective.
Exactly. Don't get caught up in the hype or try to time the market. Focus on building a solid foundation for your financial future.
It's like planting a tree. You need to nurture it, give it time to grow, and be patient with the process.
And who knows, maybe one of these 5 companies will be a part of that growth.
Or maybe this deep dive will spark your interest in a whole new industry or sector that you hadn't considered before. That's the beauty of exploring and expanding your knowledge.
Exactly. So keep learning, keep asking questions, and keep that curiosity alive. It's the key to becoming a savvy investor and making informed decisions that align with your goals.
Well said. And on that note, we'll wrap up this deep dive.
Thanks for joining us and happy investing.
Sound the alarm. I'm coming up. We'll have a ball. I'm sweet like a buttercup. You're a Barbie doll. Show them all what I'm made of. Strut down the hall. Won't stop till I get enough.